Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish black crow yesterday after the previous session's hanging man pattern, which I suppose, in order, but it nevertheless made the highest high with a long tongue on top since late June. Interestingly, the market ended up closing right on the February and March 2017 low at 104.92. It also continues to be a further close above and outside the broken but still influential upper tine of the January to May 2021 bearish Andrews pitchfork. Now, I would normally retire a pitchfork after two consecutive closes over or under it, but in this case I'll make an exception, not just because I think it may become support, but for two other reasons. Firstly, this pitchfork has been broken many times on the lower tine, which is currently at 96.98, yet each time it repaired itself. Secondly, because of its long life, it's over a year and a half old, and I think there may be more to give from this pitchfork, so I'll keep it on here for a little while at least. Just below the upper tine is the support of the congestion zone, 103.38 to 103.69, which currently also contains a long moving average, currently 103.51. Meanwhile above we have the old target X2 at 105.35. This is the primary target up from the highlighted in dark blue September to date ascending wedge pattern. A secondary harder to reach target X3 is a little higher in the 107.65 area. We still have overhead the penetrated April 2017 low at 105.68, then the 2020 low at 106.35 and the April 2020 low at 107.25 before we reach target X3 area. And then also there's the May 2020 low that is just above that at 107.66. So far today, not much either side of the February and March 2017 low at 104.92 at the moment. Cable, aka sterling against US dollar. An interesting bearish below the stomach pattern yesterday, which was, I suppose, a suitable follow-on lower to last Friday's hanging man pattern. It was nevertheless the highest high since mid-June. Prices peaked over the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16, but then dropped back down through the 50% Fibonacci line and the June 2020 low at 122.48, halting at the Fibonacci and other congestion area at 121.50, just above the slowly declining long moving average, currently 121.23. A little lower we also have support from the May 2020 low at 120.73, though I'm dubious on how good this is. Overhead we still have the primary target X2 in the 124.20 area and the secondary hard to reach target X3 in the 128 even area above for the late September to late November ascending wedge pattern, currently 116.65 to 119.22. I've highlighted the relevant trend lines for this in blue to help visualize what is going on. So far today, well, the market is staying in between the Fibonacci and other congestion and the June in the 121.50 area and the June 2020 low overhead. There seems a reluctance to tackle the long moving average below at this time. Euro sterling. A bullish white soldier, but really no different in outlook than the previous session's indecisive spinning top. All the targets, primary and secondary ones for the November-based roof pattern, which I'd highlighted in dark blue, well, they've all been achieved and we seem to be undergoing some indecision right now. Below we have the slowly rising long moving average, currently at 85.43, whilst above we have the ever so slowly rising medium moving average, currently 86.27. This was briefly breached yesterday. Above this we have the April 2020 low at 86.69, but I suspect the lesser Fibonacci resistance at 86.98 that doubles as the base of the roof pattern is probably better resistance. Meanwhile, below the long moving average, we have the April 2021 low at 84.70 and the March to date uptrend, currently at 84.54. Now, so far today, well, initially I would have said not much with either side of the previous day's close for a longer tail than tongue on the day, but the market seems to be at the moment moving up towards testing that medium moving average, so it's interesting to see what will happen there. US dollar against the Indian rupee. A bullish closing long white Mariposa yesterday, rising up from the recent 50% Fibonacci line at 81.13, up through the rising short medium moving average, currently 81.86, and finishing at the congestion seen overhead around the 81.90 area. I'd yesterday looked at the mid-November today action as a possibly building into a ascending triangle pattern. I was still minded to do that. This all threatens target X1 below in the 80.28 zone, the harder to reach secondary target for the September to early November ascending expanding wedge pattern. You can see that pattern highlighted in dark blue on my daily chart. The primary target in this is in the 80.90 zone, has already been achieved back in early November. I've said this many times before, and I'll keep saying this to myself and to you as well. I continue to wonder if perhaps, just perhaps, reaching the primary target may have been enough. Well, so far today, a large bullish opening long white Mariposa right now that punched up through the congestion at 81.90 and up to hold just short of the testing the middle time, currently at 82.69, and highlighted in bright red on my daily chart of the mid-September to early November bullish shift pitchfork. With this move higher, I think it's time to retire the secondary target X1 below at 80.28, as it does indeed seem as if the primary target 80.90 was enough for this market. US dollar against the Brazilian real. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's really interesting combination of a key reversal up and a bullish engulfing pattern, if only just on the latter. Prices dipped down to the Fibonacci-based congestion between 520.27 to 520.31 to gather ammunition, before punching higher and closing over the following: the recent 50% Fibonacci line of 522.76, the declining medium moving average currently 523.38, the short medium moving average currently 527.21, and what I've repeatedly said is not that good support or resistance, the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37. That move higher is pretty interesting on its own, but what is the huge elephant in the room over all of this is the weekly key reversal down we had here last week. I said yesterday that needed to be addressed in the next few days, and it seems as if it has been. All this is in the shadow of the outside month made here in November. US dollar against the Mexican peso. A second huge bullish white soldier and more than adequate follow-on higher to the previous session's really interesting key reversal up that was almost but not quite a bullish engulfing pattern. Prices punched up through the combination of significant May 2020 low at 1940.70 and the upper time currently at 1936.77 of the well broken but still influential March to May bearish shift pitchfork. This upper time is highlighted in bright red on my daily chart. I should say, once again, it's highlighted in red as I've done this now a few times, and each time it keeps coming back. Highlight it, take it off, highlight it, take it off. Anyway, prices continue higher through the 2021 low at 1953.63, as well as the congestion from early June between 1956 even and 1964 even, and continuing higher through the middle time, currently at 1969.14, of the still intact bearish shift pitchfork for the same move. I've decided to highlight this pitchfork in dark blue to help aid visualizing it. Prices then continue higher through the nearby April 2022 low at, that's nearby actually, at 1971.68, and then the declining short medium moving average currently at 1974.15, before finally balking at testing the core of the congestion from August and September this year between approximately 1990 and 2010, as well as the declining medium moving average currently at 1991.55, that's just above. This has been an impressive move these past two sessions. We end up closing just under the declining short medium moving average and above the April 2022 low at 1971.68, and also the middle time of the bearish shift pitchfork. So far today, small move above the short medium moving average, but then a drop back down below the April 2022 low and the middle time of the bearish shift pitchfork, but then getting cold feet again about such a move down, holding around the middle time. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.